Hey, fellow trading turds. Welcome to PP Crypto. This is the first installment of our educational trading series, and today we are going to cover the B and D pattern. So strap in. All right, welcome. Remember to like and subscribe. Be sure to click the bell for notifications. You're going to want to watch our videos because you'll pretty much become an instant millionaire since our predictions are 100% correct and they all come from the patterns that we discovered. So here at PP Crypto, one of the most important patterns that we use to successfully trade millions and millions of paper money is the B and D pattern. Now, this B and D pattern came through years and years of research and development. Literally me just staring and gazing at B and Ds for hours on end. Now, the B and D pattern. What is the B and D pattern? Well, it all starts with a little B shape, a B on its side. When price action makes this shape, it typically continues on with a D pattern. And so that is where the B and D comes from. Well, let me show you some live examples using the Bitcoin chart. Now, here you see a bunch of price action. Wait until I start drawing some B and Ds. It's just going to hit you right in the face. Every time I look at a chart, it just slaps me right in the face. So, first example. Here we have a nice B. Now, with this nice B, you can see immediately it went on to create this huge D. Absolutely massive. When a B and D pattern forms exactly as predicted, we call this a raging B and D. But we don't have to wait in order for the entire pattern to form before we know that it's a raging B and D and we need to trade it. So how do we know it's a raging B and D and we need to trade it? Well, let me give you the secret sauce. When you're watching this B form, okay, I want you to look between these two cups. And you're going to see price action kind of peak over here, right in between the two cups. Now, I don't know if it's just me, if it's psychological or whatnot, but this line in between these two cups, it always just stands out darker for some reason in my mind. I don't know why. I don't know if it's from experience. I don't know if it's psychological. But that right there stands out to me, and I'm immediately looking for that wick. And so the wick, as you can see, is right here. I like to call this the B line. And this B line acts as a support and resistance line. Once we break that resistance, well, we know we're automatically going to form a raging B and D. So you can see here, we broke through the resistance. Yeah, we tested it. We came back down. It didn't hold its support. But shortly after, it broke again and never looked back. So here at PP Crypto, we like to trade the break of that resistance immediately. We're not afraid of any throwback or pullback or blah, 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 like other traders are. No, we here have some balls. We go with the trade. Now, when it breaks through resistance, we're not setting stop losses. We're not setting take profit targets, because that's exactly how you can lose money. Let's say I set a take profit target of, 5%. Do you know how much money I would lose off this trade if I just stopped at 5%? Look at that. That's as far as I would go. That would be a very small D. But if I instead let that run, look at that profit. 66.57%. Get out of here. Why would we ever want to set a take profit or stop loss? Instead, what we do is we literally crack a Red Bull open. We put the chart on the minute chart, and we watch until the trade is then invalidated. Sometimes that's 36 hours straight of watching the chart, but that's what we got to do to make 66.57% of profits. Anyway, so when would we exit? Well, we're just looking for a lower low. Once we have a lower low, we know market structure has changed. And so we need to get out of our trade. And I'm watching this here, and I see a higher low and a higher low and a higher low and a higher low and a higher low, and then lower high, lower low, boom, I'm out. Now, it wouldn't have been 66%, but I mean, come on, almost 30%. Who here in crypto makes 30% profitable trades? Can't even name one, except PP Crypto. Anyway, we here, PP Crypto, we understand that not all BNDs will be raging BNDs. Sometimes you'll get a rejected BND, and so you have to watch out for that. So what is a rejected BND? Well, let me go ahead and find some price action here. Okay, I found one. Here we have a rejected BND. We have a cute little B. All right. Here's my B line. And you can see that price action never even tested it as resistance. Instead, it rejected that B form and went down. This is a very odd looking D, actually. It's somewhere like a club. Here, let me delete that and draw that again. We don't like our D's to form a club. I like the arrowhead here. There we go. Rejected B and D, proper, beautiful. So we have either a raging BND or a rejected BND. Super easy to take those trades. All we're looking for is the B line to act as support and resistance. And here we would take a short. And I mean, if we went and took a short and we just followed until market structure changed, I mean, goodness. We're talking about, oh, I forgot to mention, by the way, when you're taking a short, you basically want to take a short where this B is hanging down. So once price breaks that, well, then we know, all right, for sure we want to take a short. Anyway, so we take a short from here, and until market structure changes, I mean, we're looking at 33%. So both ways. We go both ways. We go both ways. We go long, make money. We go short, make money. It's not about just going long or just going short. And so, you know, if you're a United States citizen, you may not be able to short things because you can't trade with leverage because America. But, you know, if you live anywhere else, Bybit, pretty good exchange. So that's the B and D. But there is also the flip side of the B and D. We call that the inverse B and D. What is the inverse B and D? Well, strap in, because I'm about to blow your mind. Inverse B and D. I mean, like I said, it just pops right out there, slaps me right in the face. Here is a B, inverted. There is the B line, this big wick, goodness. And here, this is a raging inverted B and D because price action went in the direction that we expected. Raging B and D. We treat it exactly like a B and D, we just flip it. So once we break the B line and it's no longer acting as support, then we go short. If we have a rejected raging B and D, or sorry, a rejected inverted B and D, well then that would mean that price would instead find that as support and then continue upward, and then we could take a long once we break the base of our B. So that, in short, is the B and D pattern. Now there's a lot more to the B and D pattern that we can get into, which will be our second video in our educational series. The second video is going to explain to you how you can actually take trades before you even get to that B line, just by looking at things like volume, looking at wicks, and so forth. So hope you enjoyed that video. Again, click the like button, subscribe button, click the bell for notifications. You're going to want to watch our videos as soon as they come out. We are 100% accurate in all predictions, and so it's just easy money. I hope you have a fabulous day. PP Crypto out.